Is it time to buy right now? That's a really important question as the S&P remains above the beach ball area and we had our 1% move and it was to the upside. This is quite notable because on a weekly candle close or the weekly chart, what do we have? We had 3 higher lows, 3 higher highs leading up to here. Now we actually have a failed breakdown, but we notably have 4 hollow candles in a row. So what does this mean? Well, it means we could be in for an everything rally. Everyone's expecting a dip. And if you remember, there's like $6 trillion sitting on the sideline. So if this money decides to come out of hibernation and start buying stocks, well, we're probably going to keep going up. These hollow candles mean that we have an expansion. It literally means we open here, close here, open here, close here. It means we're moving higher. And at least for this week, we do have an actual test back down to the key resistance area. So that's at roughly 565. If we remain above that area, hey, everything's good. We got a bullish reaction. But now what we want to ask ourselves is everybody thinking this? Is like everybody looking for an everything rally? Because if it's truly going into one of the biggest bull markets ever, that's like really important. So like, what do we do? Do we buy? Do we sell? Do we wait? These are important questions. Remember, we also just closed out a recent quarter. So what is working? Well, it's not Microsoft. It's not Tesla. It's ExxonMobil, right? People are buying up energy hard. Look at that. 11, 9%. Yeah, these stocks are moving. What are they selling? They're also selling healthcare. They're selling technology and they're selling chips. So if that's the case, oh, look at this, Mr. Fear, right? We're almost gone. We're almost right back here into extreme greed. So we went from extreme fear a year ago, what you buy, to neutral to greed. Now we're on the cusp of going back into extreme greed. And we have that same thing, pop, flag, pop. As of right now, we remain in a higher high. That's bullish. Okay. But why are we at all-time highs? And like this is where there's a little bit of a wrinkle in the fold because the data that we have today, in my opinion, there's some stuff that's encouraging and some stuff is not. The top number right here, average hourly earnings, this one up to 0.5 and 0.4. Previous number revised up, this one revised up. Remember, we're supposed to be looking at good data is supposed to be good. Looking at this week, there's some red data, but that's Great Britain, right? Not so great right now. Good old here in America. ISM was a little bit weak. Crude oils are weak. Initial jobless claims were bad. That's good. And then we have ISM coming in strong. But notably this number here, because this is the big daddy. We had a 1% move to the upside. But as I read through all of it, it's not the reaction I would have expected. And I'll show you the reason why. If we're actually looking for an everything rally, what happened today? Well, it's everything US. Look at the S&P up by 0.9%, basically 1%. We look at the NASDAQ up by 1.1%. Check. All right, the dollar. What? This one's up too? Yeah, look at these daily candles here. It's just marching up. Boop, 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 boop. Those are 3 white soldiers in a row. And then just continuation. Whoa, yeah, 3 white soldiers. I'm looking at it right there. As a bottoming pattern. It opens up within the previous range, close at the high. Open up within the previous range, close at the high. That's a bullish pattern. You don't normally see the S&P up, the NASDAQ up, dollar up, and the 10-year note up. Look at the size of this candle. Yeah, WTF. So are we in for an everything rally? I think it's already happening. I think it's already underway. And if we can now get to extreme greed and now actually claim it again, form a higher high, that would be excellent. It'd be the same thing here as the S&P going up. So this is like really US exceptionalism. We've tapped this area multiple times. Just have a look here. 1 tap, 2 tap, break it on the 3rd try. Okay. What do we have over here? 1 tap, 2 tap. Are we going to break it on the 3rd try? Are we going to pop flag again? That seems like pretty notable. All right. If you guys don't mind, please considering to smash a thumbs up or subscribing to the channel. That would be greatly, greatly appreciated. So riddle me this. What do we do? Oops, I got the wrong banner up. Let's get that one up. If you guys want to join me again, you can go to thealgo.com. I don't talk about the membership much lately, but there you go, right? What's Jerome thinking? What are you thinking, right? Sugar Daddy Papa Powell, thank you for the poop. Thank you for the boost this week. I appreciate it. We went through that. We talked about non-farm payrolls for this week. What about next week? What did we get on the docket for next week? Oh, that's right. We got core CPI. And if you here's the part that's a little bit challenging. So if you would have given me these numbers today, I would have told you, I don't know, but probably flat because this one's bad. It's bad. It's supposed to be at 0.2 for 2% inflation. That's at 0.5. That's at 0.4. That's no good. This one here, good. This one here, good. So that just might mean that people are going to get they're going to get raises. Is that what's going to happen? I don't know. But here's the interesting part. If we look to the 10-year note, because it's been so strong, notably in the last little period here, notably today, these are 3 white soldiers here on the 10-year note. Oh, interesting. So the dollar's strong, 10-year note strong, yes. And we have an auction next week. On Wednesday, we have an auction for the 10-year note. We have the FOMC meeting minutes, and then we also have a 30-year auction. So let's see if these auctions go well. And then inflation appears like it's not an issue. So I think what the market's doing is it's reading through these numbers to say, okay, well, that's nice, but what we really care about is CPI. And that's what the Fed cares about. There we go. The other thing I want to look at here was just the Fed watch tool. And again, if we're truly going into an everything rally, like there's probably going to be some stocks we want to buy. Before there we go. Oh, wow. So now we got 93% chance of 2 cuts. Okay. So that's the reason why the market went up. This was at 37% yesterday. Now it's 93. Okay, let's go. So last thing I'll leave you with is if you want to come join me to trade on Slack, right now we got 53 and 36 ideas for stocks that are either on the monthly or weekly ideas. So there's lots of hot ideas here. That's your hot tip for the day. If not, thanks so much for tuning in. I'll see you guys on the next video. Thank you again.